This is your weekly update with Jim Stewart. I'm the Chief Investment Officer here at Worth Asset Management. Today is October 23, 2023. This week we get the first estimate of third quarter GDP. We get the PCE index, which is the Fed's preferred inflation gauge, on Friday. And then we get a lot of big tech earnings. But first, let's take a look at the market and see how we're doing.
Okay, let's go to the top three market headlines from last week. Equities experienced a fairly broad retreat this week after posting fractional gains the previous 2 weeks. The S&P 500 fell more than 2% at 2.4 for its fifth negative result out of the past 7 sessions. The bond market, NASDAQ, and the world also posted weekly declines as investors focused on earnings results and the bond market volatility. Gold again was your biggest winner for the week. Ground invasion in Gaza is one of the top headlines from last week. The negative price action that I just went over was mostly predicated on interest rates, but also the risk aversion was related to the Israel-Hamas war. The uncertainty surrounding a potential ground invasion by the Israeli forces into Gaza weighed on sentiment ahead of the weekend due to the understanding that participants cannot trade the markets over the weekend. Bond yields. After recovering modestly the previous week, prices of government bonds resumed their recent slide and briefly sending the yield of the 10-year Treasury yield up to 5% on Thursday, the highest since 2007, 16 years ago. We also have the yield of the 2-year and 30-year Treasuries both ended up the week 507 and 509. All right, let's talk about earnings. Subdued expectations for earnings season was scaled back slightly as the second week's batch of quarterly results came in. As of Friday, the third quarter net income was expected to decline 0.4% compared with the same period a year earlier, based on the S&P 500 companies that had already reported, combined with projections for those that are still scheduled to report. But let's take a look at some of those big tech companies that are driving this market. This is the NASDAQ 100. And yes, I know we had Tesla report and they disappointed, and Netflix actually added 9 million subscribers. So that propelled their stock. But that was the mixed results that came in. But if you look at the earnings growth of the companies that reported right now, there is a 17.7% earnings decline so far this year. And now we have 4 of the Magnificent 7, Microsoft, Amazon, Meta, and Google, all reporting this week. So that will change the numbers, but they're going to have to come in above expectations if we want this market to continue to go up. All right, let's go to the top 10 major asset classes, how we're positioned, and their performance. On a short-term basis, we remain bullish on the U.S. dollar, gold, and commodities, while the NASDAQ did trickle back down in the negative or on the bearish side. Zooming out on an intermediate term basis, we still, it looks like the same picture on a short-term basis, remain bullish on the U.S. dollar, gold, and commodities, while all the equities and bonds remain bearish on an intermediate term basis. So go to protect mode in those, or wait for a rebound and then start taking a look at your portfolio on what you would like to go ahead and trim when that happens. All right, let's look over the top 3 market movers for this week. Thursday, we get the third quarter first estimate for GDP, and right now it's looking like the estimates are averaging right around about 3.8 to 4. And Goldman Sachs has us at 3.5. The Atlanta Fed still has the high water mark at 5.4. But my takeaway from this is that we are having record government spending, which is inflating these numbers. So it's not true growth when the government is actually the driver of growth here, and it's because they're spending, not because we're producing. So we've got to take that for a little bit of this, and then let's take a look at fourth quarter, which they'll start talking about right now. The first estimates are under 1%. So it's all been pushed to this third quarter. A lot of that has to do with government spending. All right, let's go over the number two market mover for this week will be the PCE, which is the personal consumption expenditure, which that comes out on Friday from the Bureau of Economic Analysis. And the current headline, the forecast is to be up 0.33 year over year at 3.4. The core, when we exclude food and energy, only up 0.28, and a year over year at 3.7. And then when we take housing out, it's 0.37 to 4.3. So not a lot of change from the previous month. So unless this report comes in differently, this is my takeaway from this is it's a status quo report. So unless it comes in different, it's not going to be that much of a market mover. All right, number three market mover this week is the big week of earnings. There are tons of big tech companies along with large companies, and here they all are over here. On Tuesday, we get Microsoft and Alphabet. Wednesday, we get Meta and IBM. Thursday, we get Amazon. And then Friday, we get some of the energy companies, Phillips 66, Chevron, and ExxonMobil. So those will be big, and they will have big numbers as the price of oil has shot up over the past month and a half. So the biggest takeaway, tech has got to come through and push this market higher. Their guidance and their earnings have got to be stellar, and we shall see if that does it. If not, anticipate that we will break down in this market because they're the only ones that are holding up this market. All right, that's it for this week. Thank you for joining us. Our next update is Monday, October 30th. As always, continue to subscribe, like, and follow, and we shall see you next week. Have a great week trading.